Today we're going to talk about how to go about filing an S-Corporation election correctly and how to avoid IRS and state problems later on. Many business owners incorrectly assume that their CPA or online formation service already filed their S-Corporation election, as all corporations are born as C-Corporations. Months or years later, they discover the IRS has no valid S election on file. That single mistake can trigger unexpected taxes, payroll tax exposure, California franchise tax and other state complications, and audit risk. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney CPA, and I'm the owner of the tax law offices of David W. Klasing. At present, we have 24 offices in 11 states to serve you nationwide. Today I'm going to explain when Form 2553 must be filed, the most common filing mistakes, and how to go about fixing a late or defective S-Corporation election. Form 2553 allows an eligible corporation, a C-Corporation, or an LLC to elect S-Corporation status. This creates pass-through taxation while preserving corporate-style liability protection. But Form 2553 is not just a simple startup form. If it's late, incomplete, or signed correctly, the election may be invalid, resulting in C-Corporation double taxation, once at the corporate level and once again at the individual level. In general, Form 2553 must be filed no later than 2 months and 15 days after the beginning of the tax year. The election is intended to take effect for calendar year type businesses. The deadline is often March 15th. But new entities must calculate the deadline based on their actual effective date. The most common problems we see with this form include forgetting the election altogether, or the accountant incorrectly thinks the attorney filed it and vice versa, using the wrong effective date, missing shareholder consents, incomplete signatures, or assuming someone else filed the form. A single missing consent can turn a timely filing into a defective election. There's also eligibility traps you need to be aware of. Timing alone does not guarantee S status. The entity must qualify. That means only allowable shareholders can elect. First of all, there needs to be no more than 100 shareholders. There can only be one class of stock, and no ineligible owners electing. Certain trusts, non-resident aliens, and certain business entities can create serious problems with filing this form. A late election does not always destroy S status. In many cases, Revenue Procedure 2013-30 allows simplified late election relief. But relief is not automatic. The business must show 1. Reasonable cause, 2. Consistent reporting all along as an S-Corp, and take prompt corrective action. California, for example, generally follows the federal S election, as many states do, but it still imposes its own franchise tax rule. S-Corporation status also affects payroll requirements. For example, in California, shareholder employees must receive reasonable compensation. If an owner takes distributions without proper wages, the IRS can come in and reclassify payments and assess payroll taxes, penalties, and interest after the fact. When does a filing problem become dangerous here? Well, a good faith mistake here is very different from doing things like backdating documents, inventing shareholder consents, or creating false payroll records. These type of actions can transform a civil compliance issue into a high-risk audit or a criminal tax prosecution. So in closing, if your corporation or LLC missed the Form 2553 deadline, filed an incomplete election, or operated an S-Corporation before receiving IRS confirmation, you should act quickly. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help businesses correct S-Corporation elections and related payroll tax issues. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential reduced rate initial consultation today. You won't regret it.